If you're looking at buying your home, what types of loan are available to you and which one best fits you as a first-time home buyer in the Lancaster or York area? Now, closing costs are more than just fees. They're actual real cash that you're going to have to bring to the table come closing day. In Pennsylvania, expect closing costs to be around 2 to 5% of the purchase price. So on a $250,000 home, that's going to be in the $5,000 to $12,500 range. Now, what are closing costs, I hear you ask? Well, included are going to be transfer taxes, which is 2% split 1% buyer, 1% seller. You have title insurance, which I really recommend getting because it means the person selling the home actually owns it and can protect you in the long run. You'll have prepaid property taxes and home insurance. Now, one thing to watch out for is going to be the prorations of taxes. So especially with big and national lenders, they often estimate your taxes wrong. This means the number on your cost sheet may actually be far lower than the number you need come closing day. If you speak with a local lender, they know the local rules and exactly what to expect when house hunting. Now, in terms of loan products, there are a couple of options. You can have a conventional. Now, if you're a first-time home buyer, you can have a 3% conventional loan, again, depending on your credit. There is also some local banks who offer a 100% financing. Fulton Bank is a good example where they do two loans, a 20% and an 80% to finance 100% of the loan. This is a conventional loan, which enables you to get up to 3% seller help. And depending on your income, you may also be able to get a Fulton grant. But ultimately, this is all going to depend on your credit score and income. At the time of writing, you need to be earning less than $84,000 a year and have a credit score of above 680. But this is subject to change. If your credit score is a little bit lower in the 580 range, another type of financing is FHA. So this is a government-backed type of loan. You need to put 3.5% down. You will have something called MIP, which essentially is a mortgage insurance, and that will be for the lifetime of the loan, unless you put down 10% or more. But seeing as we're probably looking at putting 3.5% down to keep those closing costs at a minimum, you will have that mortgage insurance premium, but you tend to get a lower interest rate than a conventional one, and you can ask for up to 6% seller help. Another local incentive we have in Pennsylvania is the PHFA. This is a forgivable grant. Now, depending on your income and your household size, you may qualify for this, where you can get up to 5% of the price of the property back to you at closing in the form of a forgivable grant. So let's say it's a $300,000 home, you could get up to $15,000 towards your closing costs. And then what happens is this is forgiven over a 10-year period. So in year one, they'll forgive $1,500 of it. Year two, another $1,500. So if you sell after 5 years, you would have to repay half of that grant money. Now that we've spoken to a lender and figured out our financing, now it's time to see exactly what to expect when you go house hunting.